Good morning, everyone. It's nice to be here. Thank you for your kind introduction, Neil. And thank you, Ed, and Julie, and the Public Policy Forum team for all the fine work you do at the Public Policy Forum to bring together the private sector, the public sector, and to bring together ideas to put our country into a better place. Now, I know many of you thought maybe I'd change the topic and talk to you about in defense of Canadian bank stocks this morning. I'll leave that for another venue. I've made my thoughts clear, as have some of my colleagues. We are in the enviable position of being a finely regulated country, Canada, and this is, we can never take this for granted, but we have never had a systemic banking crisis. We're one of the only nations in the world that hasn't, and a lot of it comes from very good prudential regulation, again, where the public sector meets the private sector. This is the fourth annual summit. I spoke at the first one. The first one was, I think, focused on getting to more than 2% growth. Obviously, the speech didn't work because we're still below 2, but there's a lot of work to do, and we're still on a positive slope, which I think everyone should feel very, very encouraged by. By any measure today, Canada is in an enviable position as other nations look to us. Our reputation is admirable among the nations of the world. We're advanced, we're progressive, we're a welcoming country, we're a place where people want to come, live, work, and build a life. Not every country can say that. We're a country of well-educated people. In fact, we have the highest proportion of college and university-educated people in the G7. The number of people pursuing educations in STEM, an increasingly important area, is growing. Now, it may not be growing at the pace we want, but it is growing. Our natural resources are in demand, and they'll continue to be in demand. We're the fourth largest oil producer in the world. We hold the third largest reserves in the world. We have 10% of the world's timber. We have gold, iron ore, potash, uranium, you name it. I always like to say Canada fuels the world, and it is unlike many other countries in the world. Canada stands alone in that regard. We have much of what the world needs. And our economy is strong. Unemployment is low. Businesses continue to invest in new hires. And despite a bump in the road late last year, we're still seeing growth of whether it's 1.5% to 1.8%. It's still reasonably healthy, and inflation is in check. I think we can all be proud of where we stand as Canadians. Too often we're self-critical. But we also have to reflect on what we can do better, because I think our country and the participants in this room and across our country are capable of more. I think we need to be thinking about how to build the foundation of the future, how to marry our past, where we were hewers of wood and drawers of water, to the future, which is all about innovation, but marrying them together and recognizing they're not two solitary economies. They're inextricably linked. And the future of our country and the standard of our living is very much based on making sure that they're inextricably linked. Today, things are aggravated also by geopolitical tensions. As Neil pointed out and as Ed pointed out earlier, there is protectionism going on. We've seen this in the past. We've seen this in the early 70s. We've seen this in the 1930s, and it's not a good thing in the end. It's not a good thing to apply tariffs to goods. The middle class does not have a better existence. Politics is now focused on making it a better place from a trade standpoint. My own belief is that we will come to a resolution after much great pain. Emerging markets are competing with us. They're exerting more influence globally, not just China, but some of the other smaller countries, some bigger than us, some smaller than us, and they're competing for the very business that our country is capable of delivering on. So if we don't focus on the future and marry it to the strengths of what we've been endowed with, I think we have a great risk to our economy and to our standard of living. I think we have great risk to the $50,000, $52,000 per head GDP. We don't want to be like Argentina. We want to be the leading country in the world when it comes to growth, when it comes to the new economy, and when it comes to our endowed resources. Growth is not easy. Leading a large company, I can tell you, growth is not easy. It's not a given, and it should never be taken for granted. You need to have a plan. You need to focus on the plan, and you need to execute on the plan. Today, you'll hear lots of ideas. Some will be good, some will be not so good, but the key is that we latch on to them and we deliver against some of those ideas to deliver our country into a better spot. I want to think ambitiously, I want to think nationally, I want to focus on three areas in my brief talk on how we can make Canada a better place and make our economy more resilient and stronger into the future. The first thing I want to talk about is taking a portfolio view of our national opportunities, especially when it comes to infrastructure that can carry more Canadian exports to the rest of the world. We need to be a strong trading nation, but we need to have the infrastructure to support that, and we need to think about our country as a portfolio of opportunities. I want to start off focusing on the energy sector. I know you hear about this a lot, but we can't talk about it enough. It is an important part of our economy. It is our family business. And for those who inherit businesses of the past, you inherit the family business and you try and make it better. You don't just say, let's cast that to the side and think about the future. It is inextricably linked to our future. It is producing cash flows, tax revenues, finances, health, and education, and it makes us a better place. And when I think about energy that's being consumed in the world today, there is no more responsible producer of energy than Canada. But we need to think about things collectively. We need to think about our portfolio of energy assets collectively, because too often it's a regional discussion. When you go to Alberta, it's about pipelines, and justifiably so. When you go to Quebec, it's about a different form of pipeline. It's about getting renewable resources to other markets in the world. We don't think of it that way. I traveled to Alberta, and understandably, there's a great deal of frustration amongst the Canadians of Alberta because they don't feel like they're heard. They don't feel like we care about getting their resources outside the country and in a more diversified way, in a more responsible way. And I think we need to have louder voices in echoing their concerns, but more importantly, delivering against the solutions. I go to Quebec, and they say, well, no one ever talks about New Hampshire giving us the stiff arm and trying to get our renewable resources to Massachusetts. We just signed a long-term contract. We never hear anything from anyone else. Our country was not forged in war. Our country was forged with peace, order, and good government as its principles, and a national railway that linked us together and gave us common cause and gave a collective ideal and a sense of mutual reliance on one another to make Canada a better place. You can argue with history and say the railroad wasn't important in bringing our nation together. I think it was incredibly important. Today, it's incredibly important that we bring all of our energy assets, all of what Canada has, to fuel the world, whether it's our oil, whether it's our gas, whether it's our agricultural goods, our potash, our uranium, and maybe at some point it might come to our fresh water, getting it there and doing it in a diversified way together. Energy, specifically, and power-related businesses employ 1 million Canadians, directly and indirectly. We are at risk if we don't optimize that and grow that business. They deliver 11% of tax revenues. They treat us in hospitals, they provide us with education, and right now we're reliant fully, almost fully, on the United States as our sole source of business. We need to diversify that. So how do we do that? Well, we need to get the right balance with our economic policy, our environmental policy, and our security interests. We need to create a regulatory system that's effective and efficient, clarifying rules on foreign investment. That's really, really important because as I travel around the world, people say, are you really open for business? Do you really want those funds? I tell them we are. And there are examples of where things are working. The LNG facility in Kitimat is one example of that. Demonstrating to the world that these big projects can be done is a big, big, big factor in attracting that capital to Canada. And I'm not saying we have to say yes to everything, but we need clarity, and we need speed, and we need decisiveness to move forward. I want to talk a little bit about a couple of ideas when it comes to how do we attract capital to the energy sector from outside, additional capital, because more recently, one of the larger sovereign wealth funds of the world said we're pulling money out of the energy sector. And we've been talking a lot about sustainability, and our sustainability and a Canadian-made sustainability is a little different than some other parts of the world. As I said, we're endowed with these natural resources. We should be thinking cleverly and creatively about how to attract that capital back into the country. Our producers are responsible. If they want to sign up for responsibility, they want to sign up for that capital, maybe we can start issuing securities that are tied to emissions. If they meet the target, they pay out a certain yield. If they exceed the target, they pay less. And we'll find out how much the socially responsible investor wants to put in to our economy to make it more sustainable and to build it for the future. We've done this before. We've used unique vehicles to build our industries. The Canadian mining industry owes a great deal of its credit to the mining exploration tax credit, for example, that we had introduced in Canada, and Toronto in particular became a mining finance center in the world. So we need to marry this idea of capital and creativity to move forward. We can't have these siloed regional conversations about every region of our country advocating only for what's best for them. We need to recognize that our country in the next century and the centuries thereafter is going to depend on mutual reliance and taking the family business seriously to move Canada forward. Not just on this project or that project, but recognizing that our nation is in the fortunate position of being able to fuel the world, and we need to think as a nation about how we make our family business a serious future business as well. The second thing I want to talk about is growing the fourth pillar of our economy. And what do I mean by that? Ed touched on it briefly. I think you called it intellectual capital or the ideas economy. What did you call it, Ed? Intangibles. Okay. Intangibles. There's different ways of describing it. But as I look at Canada today, we have three very strong pillars. We have the pillar of natural resources, which, again, as I said in my first part, we need to work on to make more efficient and bring the capital over and get it out to market. The second big pillar is financial services, whether it's banking, insurance, pension plans, or investment management. Canada is a leader in that regard. In fact, Toronto's become one of the global financial centers of the world. The third is hard assets, infrastructure, and real estate. Those three pillars form a big part of our economy. But if you look at where the world is going to today, this intangibles economy, or this service economy, or this new economy for services is going to be the driver of future growth. It is the call option on growth for our future. And we need to position ourselves as global leaders in that regard. Right now, only 17% of our total exports are in services. The United States is at 33%, and the UK, for all its challenges, is at 45%. We need to make that a bigger percentage of our economic growth. So marrying the past, marrying the family business with the future business. That's how we think about transforming our bank. We do the same thing. How do we take the strength of our past and catapult ourselves into the future without forgetting about the past? We have room to grow in that regard. So how do we do it? How do we do it in the service economy? How do we make this fourth pillar the resilient pillar that I know it can be, but the pillar that every other country in the world is starting to cast its eye on, especially those with really, really good education systems and deep pools of capital? I think you need two things. You need an intellectual capital, and you need financial capital. Financial capital won't do it on its own, nor will intellectual capital. So let me talk about intellectual capital for a moment. The tenets of intellectual capital are based on the strength and skills of your population. To strengthen our hand and our opportunity in this intangibles or service-based economy, we need more immigration. You've heard voices on immigration on both sides of the spectrum. There's absolutely no doubt in my mind that we need more immigration. Immigration is the lifeblood of our country, and when you look at the demographics, we are going to have significant workforce gaps over the coming decades unless we accelerate immigration and the kind of immigration that we want, of skilled individuals who want to contribute to our country. In the 60s, the birth rate was at 3.2 children on average, and now it's at 1.6. That's just one simple data point of math that's going to create that gap. Now, our population growth is being driven by immigration, but it's not at the right level that we need. We don't have enough skilled workers. The Canadian Federation of Independent Business will tell you that there's over 400,000 vacant jobs. I tend to believe that we're almost at full employment today. We may have an unemployment rate of 5.6%, but we have a gap. And when you have unfilled jobs, there are lost opportunities for companies to grow. It's lost opportunity for governments to collect tax revenue, and it's a de facto cap on GDP growth, so that 52,000 that could be growing gets stunted because of those unfilled jobs. Now, we are making progress. Policies are being put in place, but we need to accelerate that. And you see that in business, when something works, you usually don't hold back. You lean in, you make the resources work harder for you. The Startup Visa program is a check mark. It's a check mark because it connects Canadian investors with international entrepreneurs and brings them here to build businesses that can fill those unfilled jobs, that can grow that service-based economy going forward. We also see this with the global talent stream that's now gone from a pilot project to a permanent project. And it's effectively a project that targets those individuals in those areas that have the skills that are most in need, and in those areas where the jobs are unfulfilled. And it's a fast-track program. Canada is a beacon when it comes to its immigration policy and the point system, but we need to accentuate that piece around the service-based economy and build on that momentum. We also need to make immigration more effective. Many people come to our country with credentials from other parts of the world. And we've put barriers in place, whether they're doctors, engineers, or accountants, based on their accreditation. Is there a way to get them to hit the ground running? Because they're not taking the Canadian jobs. They're actually contributing to the growth of the Canadian economy. And that just needs a different mindset. It's not easy to come to this country and try and build a life. Today, I'm the CEO of a Canadian bank. My father came as a refugee in 1961. And he told me that the two things that helped him then was English as a second language and the $10 he got at Pier 21 in Halifax. He always tells me he didn't get any more. Anyway, he was helped. And the help today in this skills-based economy is going to be a different form of help. So let's look at those with accreditation that come to our country with great hope and let them hit the ground running. The second part of intellectual capital relates to those Canadians who've grown up here, who get educations here. But the education system, in some ways, has a disconnect from the real economy. As I said at the beginning, Canada has one of the highest levels of education in the world, and certainly highest among the G7. But there's a disconnect when half your university graduates are earning income below the median. It means that there's a gap between what they can offer and what companies need. The Business Council of Canada's Skills Survey surveyed its members. We're a member of it. It's the only voice for the private sector in the country that represents larger companies. And 70% of the employers said, yep, people have basic skills, basic math, basic numeracy skills, basic literacy skills. Half of them have the hard skills that we need, the knowledgeable skills that we need to compete in this economy. So they leave school ill-equipped. Now, we're all working on that. 80% of the members have got co-op programs and internship programs and hackathons and apprenticeships, but we can't do enough. We need to continue to do more because the gap is going to continue to grow. One notable gap is if you talk to a technology executive from any part of the technology sector, they will say, I can't find the people. I can't find the people to move me forward. And that is a real big gap that could be as large as 200,000 highly skilled workers in the technology sector alone. So post-secondary institutions and governments and the private sector need to work collaboratively so that everyone understands the skill sets and expertise that is needed, guide students into that direction, and leverage our full workforce so that they can compete effectively in this new economy. I can tell you that our cybersecurity team at CIBC is a very serious part of our bank. The first time I visited there, I got to know some of the people on the very front lines of defending your data and your deposits. And the majority of them had a community college education, a very good community college education with the hard skills that we need to advance the strength of our bank and to make our clients safe and sound in this age of a new digital economy. The other idea that I'd just like to share with you is this notion of lifelong learning, which I'm sure all of you have debated to one extent or another. We need to change our way of thinking. The RESP is always considered as a vehicle for your children, your own children or your nieces or your nephews. Why can't we use the RESP for lifelong learning? Why can't a Canadian save and recognize that I may be working into my 70s or 80s and I need to deliver new skills? to the market that needs them. And why can't I dip into my RESP to be able to do that? Don't create a new vehicle because it creates an inordinate amount of work for us. Just create new rules so that we can dip into it and make it useful. So this virtual circle that we create, this ecosystem of immigration that's positive and attracts people that want to contribute to our country, helps hit the ground running. This retooling of our education system, I think will make Canada even more of a magnet. I said at the outset, we are in an enviable place. There are very few parts of the world that people want to come live, work, and build a life in. Canada is one of those places. And marrying together that intellectual capital is one part of the story, but the financial capital part of it is another part of the story. If we want to build that second pillar, we need both married together, and financial capital willing to take the risks to build that new economy. And that is a big deal. We're making headway there. We've had $22 billion come into the venture capital sector over the past year. That's more per capita than in the United States. But the pools of capital in the United States are extremely, extremely deep. Too many Canadian companies hit a certain level and don't see the capital there, don't see the skill set there to further their agenda and sell. They don't scale up. So they start up, but they don't scale up. And then someone buys them and takes their intellectual capital and puts it somewhere else, and all of a sudden, a small amount of wealth gets created, but not the perpetual wealth that will build the economy of the future. So we all play a role in that regard. At CIBC, we launched an innovation banking unit. We've actually dedicated resources from our balance sheet to the new economy. We sit down with the Canadian Council of Innovators. We sit down with entrepreneurs, and we think about credit differently. You can't always ask for collateral in its most traditional form. You need to look at their business plan, the content of their character. You need to look at risk. But we're allocating resources to bank those companies. Policymakers need to think about how you can create tax incentives for these companies to list in Canada without immediately paying a capital gain if they're willing to keep their capital and build their jobs in Canada. Canadian financial institutions recently came together to fund the Canadian Business Growth Fund, which is a $500 million fund that could potentially double over time. Its mandate is to invest in Canadian businesses, smaller, mid-sized businesses that are owned by Canadians that want to scale up. They're not going to take a majority stake in those businesses. They're not going to lever them up as traditional private equity firms do. They're going to provide them with the capital so they can continue to grow. This is a proven concept that's worked in the UK twice already, and it's starting to work here in Canada as the team is up and going, and it's led by George Rasolatos right here in Toronto with plans to expand across our country. Our country doesn't need and is unlikely to have the 40,000 person organizations growing everywhere. It's likely to have 1,000 and 2,000 person organizations growing. These are the companies we need in the service sector, and it's that marriage of intellectual capital and financial capital that'll bring things together. But we need to recognize that this future economy needs both, and it needs us all to lean in very hard, whatever part of the economy we're working in, to make that work. So point number one, our family business. Point number two is our service economy. Point number three, and we always think about this in our own business, is as we get out to these markets, as we have goods to offer and services to offer, how do we make sure we're growing in those markets? So we're really, really good at signing trade agreements. We've got 11 of them. The most recent ones being the CETA and the CPTPP. 11 free trade deals around the world over the last 10 years. But we still rely heavily on the United States. They're a great trading partner. They're our next-door neighbor. They are one of our best friends. But we can't rely on 75% of our goods continuing to just go to the United States. Today, there's a lot of hand-wringing around whether the USMCA will get signed. My own belief is it will get signed. I just don't know when. But right now, we have the NAFTA in place, which also serves its purpose. But the key here is diversification. Well, how can we get 50% of our exports from non-US markets? That's the key. And if we can build this service-oriented economy and our family business and strengthen them well together, I'm absolutely confident we'll do that. But the last 15 to 20 years haven't indicated that. In the G7 alone, trade volumes of our G7 partners have grown at 3 times our own. 3 times our own. That's a big delta. And our growth in services, as I said to you at the beginning, is at 17%. The Brits are at 2.5 times our level. What are we going to do to change that? Part of it's the incentives we can offer companies to set up in these other markets, because signing a trade deal is one thing, getting business done is another. It's not a subsidy. Part of it is commercial diplomacy. What is commercial diplomacy? Commercial diplomacy is re-gearing our diplomats from talking about how great Canada is, how good we are as people, to recognizing that we're really good business people as well, and getting those commercial diplomats of ours to scale up our businesses in the markets where they represent Canada. Commercial diplomacy should be at least 2/3 of our diplomatic efforts to improve our standard of living and to build that diversified economy that will build the Canada of the future. That could also include leveraging retired business executives and leaders, entrepreneurs, academics, and all those willing to be commercial ambassadors for the country. Because our country can only maintain its standard of living if we have attention placed on our family business, if we have attention placed on where the economy is going to, and if we do a really, really good job of building resiliency by diversifying our economy. So, in conclusion, very simple point. Canada is in a great place, but we shouldn't take anything for granted. You can't take growth for granted. You can't assume it's going to happen unless we lean in. We need to lean in on our naturally endowed resources together, collectively, with mutual reliance, and a national view to making Canada a better place. We need to take those resources that produce tax revenue and other financial resources and capital and put it into the service-based economy. Not just the money aspect of it, but the intellectual capital of it. And if we fuse those two well together and diversify our economy beyond the US, I'm absolutely convinced that, as Wilfrid Laurier said in the early 20th century, this is our century. Maybe it can be our series of centuries, because I have every confidence that our country can do it. We just got to lean in and make it happen. Thank you.